今年听到最多的话就是亏亏亏。
This year, the word I've heard the most is loss, loss, loss. We've been losing money for 8 months straight. I've raised laying hens for over 10 years, and I've never seen a market like this. In a normal year, you might lose money in the first half, but you make it back in the second half, and overall, you still come out ahead. But what's happening this year is really rare. 8 straight months of losses. Some people lost 100,000, some lost over 200,000, and some even lost 7 or 800,000. China's egg market in 2025 faces a sharp downturn. The number of laying hens has reached a record 1.4 billion, creating severe oversupply. Egg prices have plunged as a result, leaving many farmers with heavy losses.
咱们今天就来算算这笔账。
Let's take 20,000 hens with a 90% laying rate as an example. They produce about 18,000 eggs a day, roughly 2,250 pounds. At today's price, 2.4 yuan per pound, you bring in around 5,400 yuan a day. And how much feed do they need? Around 4,600 pounds a day. With feed now at 1.35 yuan per pound, just feed alone costs 6,210 yuan, about $875. 6,210 minus 5,400, what's that? A loss of 810 yuan, around $114. And that's before you even count water, electricity, labor, vaccines, veterinary meds, all those hidden expenses. Plus, electricity is expensive now, and with the occasional buyer who skips out on payments, the losses just get even worse. So the real loss is more like 1,400 yuan a day. That's about 42,000 yuan a month, around $5,900. I'm not exaggerating one bit. It could be even worse. A vendor at Beijing's Xinfadi market says supply far exceeds demand, and this year's prices are the lowest in recent years. The Ministry of Agriculture and Rural Affairs reports the wholesale price of eggs fell to 7.63 yuan per kilo, or $1.07 per kilo in October. This marks a 5.2% drop from the previous month and a 26.6% decline from last year. The downward trend continued in November, with a weekly decline of about 4%.
消费者笑了，养蛋鸡的却哭了。
Consumers are happy, but egg farmers are crying. The egg prices are heartbreaking. Even Shanghai bok choy is over 4 yuan a pound now. But look at eggs, still under 3 yuan. But who actually knows that egg farmers are losing sleep over this? You have to buy corn, soybean meal, feed, and the eggs you sell don't even cover the cost. Before we wished the hens would lay more eggs. Now we get a headache just looking at them. Sell them, you lose money. Don't sell them, you lose even more. Chickens are cheap. Eggs are cheap. When will these days of eggs being worth less than vegetables come to an end?
A financial influencer noted that the market faces a rare universal loss situation. Prices in major production areas have fallen to 5.74 yuan per kilo, down more than 38% from last year. Production costs remain at 6.86 yuan per kilo, so farmers lose nearly 1 yuan, or about 14 cents, for every kilo of eggs sold. This price gap has prompted many small and medium-sized farmers to cull older hens, while even larger farms are reducing production. The influencer's article also noted that chick sales fell 5.65% in July, signaling fewer new laying hens in the coming months. In October, culling of older hens in major regions like Hebei and Shandong increased more than 15% from the previous month. These figures indicate farmers are reducing flocks and supply is starting to decline. The root cause of this crisis is the imbalance between supply and demand. Sociologists say the current situation shows clear oversupply. The sharp rise in laying hen numbers in 2025 stems from years of expansion. From 2021 to 2024, the egg farming industry enjoyed high profits, which spurred large enterprises and small farmers alike to boost production. This rapid growth soon outpaced the market's capacity to absorb the supply. By early 2025, laying hen numbers stayed elevated above 1.14 billion, even as demand weakened amid economic slowdown and lower consumer spending. The Chinese government's push for industrial revitalization has fueled overproduction in the egg industry. As early as the 13th five-year plan in 2016, authorities introduced subsidies and policies to promote large-scale farming. Local governments aiming to improve performance provided low-interest loans, feed subsidies, and rewards for expanding output. The approach appeared to guarantee success for farmers, but it led to intense competition for the same market and widespread losses. Industry expert Gong Gui Fen noted in 2023 that the egg-laying industry has seen steady profits since 2021. Combined with the rise of white-feathered broilers as the country's second-largest meat source, this spurred overcapacity. By 2025, this policy-driven expansion hit its peak. A report for the National System for Layer Production Technology shows production has shifted southward for more projects in southern regions. The traditional pattern of north producing and south consuming has ended, yet total production capacity keeps growing unchecked. Why did this happen? Local officials are judged on key performance indicators like the number of chickens raised, annual production in tons, and income generated for farmers, rather than profitability or supply-demand balance. Once chicken houses are built and stocked, targets are met, GDP rises slightly, and rural development reports gain a highlight. Whether these chickens later flood the market is beyond government concerns. The result is unchecked expansion that ignores real market demand. In this egg price plunge, small-scale farmers suffer the most. Without scale advantages, they face high costs and low efficiency, and one loss can drive them out of business.
We've been losing money for so long, and most of us are miserable inside. But very few farmers are selling off their flocks, and even after selling them, they still restock with new hens. Why do so many people keep on doing this? It's not because they really want to. It's because once you're in this business, you can't just quit whenever you want. Why do I say that? Because all the newcomers in the last few years basically all have loans. The initial investment in poultry farming has gotten way too high. Ordinary families can't just use their savings to start anymore. You basically need a loan. Over 95% of new farmers are in debt. The only ones without loans are the old-timers who started 20 or 30 years ago, or even just 10 years ago, when you could start with 300 or 500 chickens. Their coops have long since paid for themselves. They're not worth much anymore. They can stop anytime they want. But the farmers with loans, some owe 100,000, some owe several hundred thousand, and some owe millions, even over 10 million. How can they stop? They literally can't. Why not? Because if they keep raising chickens, there's at least a chance the market improves and they can break even, or maybe even make a little. But if they stop, all the creditors will come knocking. This bill needs paying, that loan needs paying, and even the interest alone becomes impossible. So everyone's just gritting their teeth and hanging on. There's really no other choice. The farming industry now requires huge investment, carries huge risks, and once you're in, you can't just walk away, you're stuck. So if you are thinking about getting into this business, I would really advise you to think twice. Seriously, think it over.
This sense of powerlessness is widespread. It reflects the challenges small and medium-sized egg farmers face nationwide. Media field reports confirm this. Journalists report that culling older hens has become farmers' latest last resort to limit losses. In past years, older hens provided minor extra income and were culled based on egg-laying performance. This year, with egg prices dropping to just over 4 yuan per kilo, many farmers say they cannot cover feed costs, and each additional day of keeping hens increases their losses. Industry experts note that even if egg prices rise again, restarting operations require significant funds for chicks, feed, maintenance, and labor. The debt and psychological toll from past losses mean many farmers may not return to the business. The challenges extend beyond the farms themselves, affecting nearly the entire supply chain. Feed suppliers face challenges as well. In theory, mills can adjust prices based on corn and soybean meal costs and profit through scale and formula changes. In reality, as egg prices fall, farmers reduce feed use, scale back operations, or empty coops. This leads to a sharp drop in feed sales. Production continues and wages must be paid, yet fixed costs remain high. Mills extend credit, raising the risk of bad debts and leave the sector unprofitable. Hatcheries and breeder farms connected to feed suppliers are struggling as well. When egg prices were high, chicks were scarce. Now sales have fallen, forcing hatcheries to cut or halt production. Some hatching eggs sell at low prices. The main issue is not low prices, but a lack of buyers. Breeder hens keep eating feed with no market outlook. Distribution faces equal strain. As egg prices drop, wholesalers and cold storage operators who stocked at high prices lose money the moment goods move. If they hold back, they pay rent and electricity while risking spoilage. Transport companies handle fewer loads, accept lower rates, and often return empty, leaving vehicles and drivers idle as fixed costs continue. Wholesalers and retailers cut prices and use eggs as loss leaders, covering stalls, utilities, and labor despite weak demand. The approach of small profits through high volume shrinks to just small profits, pushing costs down the chain and hitting the weakest links hardest. When observers say this round of falling egg prices has caused losses across the entire supply chain, it is no exaggeration. If eggs reflect a broader decline, today's China resembles a giant mall holding a clearance sale everywhere. On the surface, bargains abound. From a macro view, many products are dropping in price, competition has spiraled out of control, and deflationary pressures are mounting rather than easing. Official data shows China's consumer price index rose 0.2% year-on-year in October 2025. On the surface, this marks a return to positive growth, ending 2 months of decline. The official report described it as a moderate recovery in price levels. Yet the producer price index, which tracks factory gate prices, has stayed negative for more than 30 months. In October, it fell 2.1% year-on-year, a smaller drop than in prior months. In simple terms, consumer prices are barely rising while factory prices continue falling. Long-term deflation at the production level means businesses sell goods for less than last year, even as wages, rent, and interest stay largely fixed. This gap between falling prices and stable costs slowly erodes profitability. Beyond eggs, the pattern of oversupply, price wars, intense competition, and deflation has become widespread. Electric vehicles offer a clear example. Government subsidies and local projects boosted domestic market share and production. Too many manufacturers and excess output triggered repeated price cuts. The solar panel industry follows the same path. Producers expanded capacity for modules and cells at every level. By 2024 and 2025, global demand could not absorb the supply. Prices for modules, silicon wafers, and cells plunged, often below cost. Years of profit quickly turned to losses, and industry reports now warn of severe overcapacity and cutthroat competition. Real estate faces a similar struggle. After the belief that housing prices only rise collapsed, developers turned to price cuts. Since 2024, new home prices nationwide have fallen by mid to high single-digit percentages. Most cities saw monthly declines through 2025. In October, first-tier cities dropped about 0.3%, second-tier 0.4%, and third-tier 0.5%. Overall, prices keep sliding, and inventory pressure persists. Weak sales of new and second-hand homes have cut demand for furniture and renovations. Moving once meant buying furniture, appliances, flooring, and fixtures at the same time. Now many people delay moves or renovations or make do with existing items. Furniture stores run year-round discounts with repeated price cuts, yet foot traffic stays low. Building materials follow suit as tile, wooden door, and paint makers slash prices just to clear inventory. Appliances, small electronics, and daily necessities face the same pressure. Sales lagged through 2024 until government trade and subsidies briefly lifted demand. Price competition persisted nonetheless. From Singles Day promotions to live stream events, air conditioners, washing machines, and rice cookers sell at steep discounts. For companies, the main tactic is low prices to boost volume and spread costs. Intense competition draws everyone in, but the overall market does not expand, it contracts. Consumers spend less not because life is easier, but because they have less money. Studies show China's consumer confidence index has hovered near historic lows for the past 3 years, with sharp declines after 2022 that show no recovery. This leads to a paradox. Industries wage constant price wars, yet the consumer price index stays low and often turns negative. Producer prices, meanwhile, have declined for 3 straight years. Experts view the sharp drop in egg prices as a warning for Chinese agriculture. It goes beyond eggs. It signals policy errors, market failures, and the issue of social fairness. The risk lies not only in today's losses, but in potential collapses across other sectors if the signal is ignored. Experts also caution that relying on farmers' repeated losses to keep price statistics favorable can undermine domestic demand, heighten deflationary pressure, and generate systemic risks.